Hi there, Phil Rogers, Lauren Hall here from 𝘄𝗲𝗽, coming to with our weekly wrap. Another big week for everything that is trending in lending. So, well, firstly, we had the Loan Market Queensland State Awards on Thursday night. So, our first chance in quite some time to get everyone together, be it a little bit of late restriction changes with COVID, and there was some adjustments to the evening. It was so good to still be able to attend, catch up with everyone. It's been a big year for a lot of the brokers and lenders alike. So, it was great to get there and celebrate some awards and a few shandies and whatnot.
Even a sit-down Mexican way.
Yeah, sit-down Mexican way, because there was no dancing. So it was good. Everyone in good spirits and just really good to be able to celebrate the year with the team. So yeah, so big shout out to LM Corporate for putting it on. It was a great night, and yeah, good to see everyone there. We had some feedback on last week. We spoke about probably 3 areas that they were looking at, I guess, or going to make some decisions on in lending in the market, and some changes to try and slow the market down a little bit. We had Frydenberg and the treasurer, he who holds the treasure, making some decisions on what that might look like to slow the market. So we talked about debt to income ratio. We talked about loan to value ratio changes. And we talked about that assessment rate or buffer rate in servicing. So we did see the first of those 3 decisions made this week, and that was around the assessment rate, so the minimum buffer. And we've spoken about this before, and it's been relevant. It's been a huge part of the last 12 to 18 months in any case, but they're just coming out now as it was a capped assessment rate. I think originally minimum base was about 7, and it was 8. And then obviously with everything that was happening with COVID, rates come down so much, they pulled that back. And you've seen some lenders adopt a minimum, whatever the interest rate is, and then a minimum of say 2.5 above that %, a buffer built in that you have to show that you can service the loan at that slightly higher interest rate. They've now just increased that slightly up to 3%. So for someone looking at a fantastic interest rate at the moment at a 2% or 2.5%, those clients would now be needing to service at 5 or 5.5. So to be fair, we were probably around that space anyway.
And also understanding that that's a decision made by APRA, one of the regulators. So the banks still do work a little bit independently in that we've seen that when that assessment rate was reduced, all the banks didn't suddenly just reduce their assessment rate. So they already have had probably buffers on top of that, a lot of them. So it doesn't necessarily mean that all of them are going to change it from a borrowing capacity point of view, because some of them were working on a 3% buffer anyway. So there will be a little bit of change, but the banks do obviously under responsible lending also make some decisions around that as well.
Yeah, we've currently got some that are way above that, to be honest. So, 3% for some probably brings them down, to be honest, which has been, interesting to watch. But I mean, we saw some auctions, over this last couple of weeks.
Pumping.
There does not look like anything is slowing down. So for decisions like that, again, I don't think it's going to have like a full handbrake, decision. I don't think we're going to see that. But I guess it's them just trying to to ease it in and see what that looks like. Thankfully, it's not a heavy knee jerk, and they didn't bring out 2 or 3 of these changes at once and really sort of halt the market. So but it absolutely has changed. And if people were looking at their borrowing capacity and did have a pre-approval and it was tight, potentially that would be worth absolutely reaching out and reviewing that, just to go, okay, am I still at the same level? Because as of now, they must be reassessed. So conscious that some of those may have shifted, definitely. The other piece, I know people aren't going to like me saying it, but the run home to Christmas, crazy.
It's coming.
What are we, 10th? We're sort of, a 60-day settlement right now would only just slide you in before Christmas. That's how close that's going to be. So this time of year, we really wanted to start that thought process about just needing to get organised. Getting yourself into play if you are looking to purchase or sell. And if you want to make those changes prior to Christmas, we don't have a lot of time. That 30 to 60 days, if it's a buyer, and sort of getting pre-approved, getting in the market, finding a property, making the purchase, going through that contract phase and being able to settle in a timely manner, noting that run before Christmas, traditionally one day somewhere in that last week before Christmas holds the record for the highest mortgage settlements in the country's history, and every year it gets surpassed, and it gets overtaken. So it might think, we've got plenty of time, or we can just run that in. If the banks have been as busy as they've already been, and under the amount of pressure they are in every part of that process, from the upfront and getting it pre-approved and then getting it approved and then getting loan documents out and then involving Australia Post in some cases, and then trying to get ready to certify documents and getting ready to settle. There's just all these little steps involved, and you blow a couple of days out on each one of those, and then you have volumes surpassing what they're in a position to be able to do. It's just a little bit of the perfect storm. So where possible, highly suggesting, first thing, call us. Second thing, doesn't matter, we'll do the rest. I can use that. But no, get organised, get in touch. If you're starting to think about that run home for Christmas, don't miss the boat, so to speak. And that's probably a couple of really important updates this week. It has just been head down, a little bit of a short week. Awards night, maybe not feeling so great the next morning. So it's been a bit of a crazy short week for everyone, but fully back on tech, and super excited for the week ahead. And as always, enjoy the weekend, and we will see you soon. Bye for now.
Bye.
Bye.